Good morning. We will pay attention to depreciation today. The main feature of any depreciable asset is that you purchase this asset to earn an income in the future. So it means that there will be an inflow of money in the future, and you bought this asset to use in the business in the normal course of business, so in your daily transactions. That is, for instance, land and buildings, furniture, equipment, machinery. Normally, amount shown in the balance sheet is the historical cost price, so that is the price that you paid for the asset. That's the purchase price plus any expenses to get the asset to the place where you will use it. So it's import duties and carriage on purchases. And also if you have to pay expenses to get it in a using condition, like installation costs. So that historical cost price is shown in the balance sheet, less the accumulated depreciation. That means all the depreciation that you've written off on this asset from the date of purchase until the end of this financial year. Depreciation is the process of allocating the cost of the asset as an expense over the period that it is used. So it means if we purchase a vehicle for 200,000 Rand and we decide to use it for 5 years, then we want to allocate this 200,000 Rand, the cost of the asset, over the time that we use it. So we write off depreciation. And if it's the cost price method, it means that we will write off 40,000 Rand every year over a period of 5 years. That means that the cost will be allocated against the income over the useful life of the asset. Because we use this asset to earn an income, we also want to show the expense to use the asset, and that's depreciation over this useful life. Depreciable assets can form a significant part of the total assets of a business. So a very large portion of your assets consist of fixed assets or depreciable assets. Depreciation can have a major effect on the financial position and in the determination of the financial result. So if the depreciation, your assets are very high, it can cause the business not to make a profit or a very low profit in a specific year. So the financial result will reduce. Depreciation reduces the profit of the business. That means that your financial result is lower. If the accumulated depreciation is high, then it means that you deduct it from the cost price, so your asset is worth less, and that would also have a major effect on the financial position of the business in the balance sheet. Depreciation is allocated as an operating expense because you use these fixed assets to operate in your business. That is the part of the fixed assets which is allocated to a specific accounting period as an operating expense. So we will show the depreciation from the day that we buy it until the day that we sell it. Depreciation is an expense, therefore depreciation will be debited so that the owner's equity can decrease because it will decrease the profits. Accumulated depreciation will be credited to increase the accumulated depreciation. Depreciation should be written off on the depreciable asset during the useful life of the asset and should be allocated to each financial period as the asset is used. So in the beginning, you will decide how long you're going to use this asset. So how much do you have to write off each year so that you will be able to write off this asset in its useful life? The objective of depreciation is to provide a justifiable method of cost allocation against the income that was generated by using these fixed assets. The methods of calculating depreciation. There are various systematic methods of depreciation. Whatever method is selected should be applied consistently from one accounting period to the next period on the same type of asset, so that you will be able to compare the results from one year to the next year, and you will also be able to compare it to the results of competitors. The following methods are the most commonly used: straight line method and diminishing balance method. In the straight line method, you will write of an equal amount every month over the 60 months periods if you use the asset for 60 months. According to the accumulated depreciation amount, you will deduct all the accumulated depreciation at the end of the previous year from your cost price, and then you will calculate the depreciation on the reduced amount.